pretty happy with that. Who's staying for drinks at the end of the day? Everybody. Oh, two of you at least. That's good. So they are, and look, I've been told by a couple of people, and my apologies, my voice is very deep, as for a woman, I suppose. So it's a little bit hard for some of us to hear. So if you need me to speak up or slow down, just stick your hand up, because as someone who is hearing challenged myself, I would never be offended by that. I'd rather you could hear me and hear what we have to say, because there's some, apart from what I'm saying, of course, I suppose it doesn't really matter. We'll go to that point. All right. Sherry, you know, I saw you laughing. Don't you ever laugh. This is actually this gentleman here in the middle with his suit on used to be a very long-haired surfer dude that used to help in television production at GWN. I used to be the newsreader at GWN going back, let's go, shall we? 30 years? 35, thanks. Yeah, great. A long time ago. But now he does intelligent things like make money on the stock market and listening to all of you, so which is what we'd all like to do. And we can do that if I let us get on to our next investor. Robert is joining us up on stage. And this is something different, something a little bit different from the normal. Chats of a whole new industry here in Western Australia with our first presenter. The company is Desert Metals, a Western Australian company. They're actually exploring for rare earth elements, nickel and copper. And they've recently announced an exciting new discovery up near one of my favourite places of the world is Meekatharra. And it is. It's a very interesting little place to go if you've ever got the opportunity to go through, especially when the wildflowers are going. But you guys are looking for something that's there every day of the year and could be making us money every day of the year. So we listen with interest. Robert, would you please welcome the Managing Director of Desert Metals, Mr. Rob Stewart.
Thank you, Chrissy. And those of you who know Meekatharra will know that that's exactly what it looks like all the time. It's lovely and green, fresh, beautiful place to explore. At least it has been for a lot of the last year or two when the cyclones have come through. A number of years ago, I was looking after nickel exploration, near-mine nickel exploration at Leinster and Mount Keith for the world's biggest mining company, who had recently entered into a joint venture with Norilsk Nickel, Russia's largest mining company, to have a global exploration portfolio. There were great plans and fanfare associated with this, and I was host to a delegate, a number of Russian geologists that came out, and these guys were really Russian. They were wearing odd singlets, and they didn't speak a word of English, etc. And I was proudly showing them the core from Mount Keith, one of Australia's largest nickel mines. And I don't know how many of you have seen the core from Mount Keith, but it's black rock, and you need a hand lens to see the little specks of nickel sulfide that are within these rocks. And these guys were coming from Norilsk, the Norilsk Talnak intrusion, and they'd sort of hand over the core and Vladimir, что ты делаешь? Ну, да, по-моему, это совсем самое плохо. What does that mean? That means, converted into crocodile speak, that's not a knife. A couple of years later, I was transferred by BHP into Moscow, and I got the opportunity to go up to Norilsk, and I got the opportunity to look through their core shed, and I realised why they were rather unimpressed with what I had gleefully shown them from Mount Keith. The boxes and boxes of solid metal and nickel and copper mineralisation, and the richness of their deposit made me start to think about why we were exploring for these komatiite nickel deposits within Western Australia, and why we weren't exploring for the nickel copper intrusive deposits around the Craton margin that had been where the giants had been discovered in places like Russia and Canada. So the seeds of Desert Metals started at that time for me, although I didn't return back to Australia and start Desert Metals until 2018. By 2018, a company called Sirius had beaten us to it somewhat, and were exploring in what was then an extremely unfashionable part of the world in the Albany Fraser. They had the ground all to themselves. They discovered Nova Bollinger, a nice fat EM conductor. They drilled a hole into it. They sold it for just under $2 billion. Happy shareholders, and the rest is history. When we came back in 2018, we said this is a valid exploration model. It has been underexplored for in Australia, in Western Australia in particular, where the komatiite nickel, I'm not going to go into the technical differences, it's just a geologically different sort of deposit. The Kambalda Agnew Wiluna belt had been thoroughly explored for. we said the northwest Gilgan Craton up in the Narria terrain shows all the promise of being just like the Albany Fraser. It's on the Craton margin. This is where we should be exploring. In early 2020, Chalice Mining did me a fantastic favour by discovering Julimar and the Gonville deposit on the Craton margin of this style of deposit. And it made it an easy sell for us in order to go to IPO and raise money to say, we're going to go and find the same stuff up in the Narria. Now, we've been up there for 18 months. The ground, which was vacant when we took it out, so we got to manage to get the pick of our ground. But of course, now the staking rush begun. Our neighbours include Chalice, who also believe this area is prospective. And we're exploring for nickel copper sulfides. My fellow executive director of Desert Metals is sitting on a diamond rig as we speak, hopefully drilling through fat, massive sulfide intersections. But the thrust of my talk today is not the foundation of Desert Metals. The thrust of my talk today is what we've recently discovered in our clay-hosted rare earth element mineralisation at Inuendi, where we had been looking for nickel copper PGE deposits. So Inuendi is showing all signs of having multiple smoke. We've got PGE numbers that are getting up towards the ore grade numbers that that Chalice has in their 300 million tonne ore body over short intersections, albeit we've got the right sort of mafic and ultramafic intrusive rocks. We have great metallic conductors. We are yet to make the big company discovery in terms of nickel copper sulfides. However, in the process of following up these PGE anomalies, we did extensive air core traverses and well aware that a number of our competitors and a number of our neighbours were concentrating on clay-hosted rare earths in terms of their exploration program. We were taking notice of what we were getting in terms of rare earths. Now, as it happened, the grades and the thicknesses that we were getting were extremely comparable with our neighbours, and as a junior microcap company, you take what you find, and we had realised that we had piggybacked on the prospectivity of the area for rare earths. We are still getting decent nickel copper PGE hits here. The thrust of what I want to talk about is the clay rare earths, why they're a little bit different to the other rare earths that you may have heard today, the hard rock rare earths, and the reason why we think that there's potential for a whole new industry here for Western Australia over the 2020s and into the future. So I'm just going to take one step back just for a couple of slides, because to say, why rare earths? Is this a fad? Everyone's talking about rare earths, right? Everyone's putting up their hand saying, me too, we've got some rare earths. And why is it all happening now? Why has lithium gone through the roof? Why is rare earths following? It's got everyone's attention. The entire thrust of this is, as everyone knows, the whole world is decarbonising. And the mining of coal is coming to an end, but of course the mining is not coming to, in order to supply the electricity for renewable energy, in order to supply the metals for the solar panels, for the wind turbines, the batteries, the electric motors in cars, a whole different range of metals are needed. And for some materials, some of these things like nickel and copper, there's already an enormous market for nickel and copper, as we know. The electrification of the world will add to the demand for nickel and copper, no doubt, but it'll be a small percentage of their already established market. For things like lithium and rare earths, 50 years ago, there barely was a market for these things. So the multiples are exponential for these metals, and it's not going anywhere. So rare earths these days means electricity, and while there are numerous uses for rare earths, and I've listed a few of them then, the future and the reason why the electrification is so important is rare earths means magnets. In order to produce electricity from a wind turbine, in order for an electric motor to work, you need good magnets. And the best magnets are made with neodymium, praseodymium, dysprosium, and terbium. That's just the way it is, and this market is only going to get better. It's only going to get bigger. Currently, as I think most people are aware, China dominates the market. Hasn't always been that way. China only became a player late 80s, early 90s, and then quite quickly, within a decade, they sort of cornered the entire market. And And it's only been recently that Australia and the US have started to produce and have become players in that market, with Australia's production coming from Linus's Mount Weld mine in Western Australia. Now, those are this year's figures. Over the last decade, you can see the production of rare earths has more than doubled globally. The rest of the world is starting to catch up with China. This has been enhanced by it's been politically good news. The certainty of supply has become an issue, particularly during COVID. That became something that was quite apparent. And so there's real political will in order to get facilities moving, to get industry moving in the rare earth space. And Desert Metals intends to be part of it. My button doesn't seem to, there we go. I just put this slide up to show the prices of, particularly of the magnetic rare earths, neodymium, praseodymium. If you look at the previous slide, where production over the last 5 years has doubled, prices have tripled. So this demand is being absorbed well and truly by the market, and we haven't even gotten started yet on the electrification of the world, and the world is electrifying. That train has left the station. The world will be needing more of these metals, a lot more of them. This slide, forgive me for the complexity here in this slide. This was just meant to highlight that the clay rare earths are something different from the hard rock rare earths. They're a secondary weathered product. As a granite or an alkaline intrusive is weathered, it's depleted in potassium. The kaolinite clay that's left, the aluminous silicate, will have a weak negative charge, which will attract a cation. A rare earth cation will be attracted to be loosely bonded. It's sometimes as easy as putting this stuff on a leach heap and putting a salt solution through it to pull out the cations, replace it with a sodium cation. The big difference, the reason why the grades in clays can be so much less than the hard rock is because of the processing. The processing is anticipated to be quite straightforward in order to produce a valuable product. If the processing and the metallurgy is not right, well, then you can't compete with a deposit that has 10, 15% rare earths. Back to our deposit at Inuendi. We have recently discovered these white drill holes, that's around about 20 kilometers diagonally across that image. And the white lines, you can see we've got a white traverse up in the northeast. The white lines is where we've traversed looking for our rare earths. Our intersections, if you go, feel free to go and compare them with some of the competitors. Some of the other junior companies are sticking their hand up and saying, me too, we've got some rare earths. Our numbers are good. These grades are good. These thicknesses are good. The red results there, we've got about 1,000 meters of results back. We've got 12,000 meters that we just drilled. We're going to get straight back out in the field and be drilling some more. These results got people's attention. We've got about 1/10 of them back. The rest of them are imminent. We've been waiting for a while. We haven't received any, but we do expect them over the next couple of weeks. We're a little bit at the discretion of the lab. We feel that we have, because we've flown airborne EM over the area, we've got an idea of where these conductive clays are. We have a feeling we know where the consistently thick clays are. This is just a map of radiometric thorium, which is also used as an indicator in terms of where the rare earths, the primary rare earths may have been. We can look at depleted potassium to see where the weathering has taken place. We can look at our EM data to see where the clays are the thickest. And so we feel that our grades on these rare earths are such that we intend to become a player in this space, intend to become a new part of this industry that is developing, and there's lots of exciting results that are coming down the pipe. So that's our rare earths. As you can see, the small results that we have back, they're thick, they're consistent, they're high grade for clays. We're waiting with anticipation the rest of the assays. Our recoveries are good from the recovery work we've done. I'm going to cycle back at the end of the talk here now to where I started, which is our bread and butter, and where our executive director right at the moment is sitting almost where that says Dingo Pass target area. He's sitting on a diamond rig looking at some metallic core, I hope. These were targets that were identified from an airborne survey we flew last year. We followed up on the ground. The first drilling didn't explain the conductors. We've remodeled downhole EM. We believe we know where they are. We think we're going to hit metal. This is where we're drilling right at the moment. Tony's sitting right up there on BRC 007, drilling into that red little plate up there, and we will know what's in it shortly. Our last project of interest is where we discovered completely blind at Bilelli. When you go out to Bilelli, it's nothing but a floodplain transported sand. There's no geochemical signature there at all. We hypothesized that the Minjar Rain Greenstone Belt went undercover through the license. We did the very first drilling there based on that understanding of the gravity, but also based on the modelling of a conductive plate that we modelled there. 200 metres down, first holes ever into the area. We hit copper sulfide mineralisation. These are not ore grades, but we haven't drilled this thing out yet. Thicker, higher grade parts of this metallic body could well be an ore body. But regardless if it's an ore body or not, we have 20 kilometres of new, untouched greenstone belt that we know to explore that has anomalous copper, that has anomalous, the potential for anomalous gold in it. So this also is our third exciting project. So for the moment, our projects are, this is our company. We've got a minuscule market cap. Come back and see what we're at in a year. We have three major projects. We have a great new rare earth project. We have Dingo Pass conductors that look like they could well be nickel copper sulfides to me. And we have our Bilelli project, which we've already intersected blind copper sulfide mineralisation with the real thing. Thank you, Chrissy.
Robert, you could have, and I know we've cut the recording now, but what Robert would like to have said to you all is, I've got so much more to tell you, and I've got a few beers out the back at 5:15, and come and join me then. That's what you wanted to say, wasn't it? Robert and I had this discussion beforehand because he had so much stuff to pack into his talk. I said, you're going to have to cull some. We go, no, I'm going to get through it. He was an optimist, and I like that. But there is a lot more to that story. So please go and have a beer or two. If you're at home, you can't. I'm sorry if you're playing along. So open a bottle of wine and ring him later and share with him that way. Right. Our next group who is coming in here today, I was having a look at them as they came through. Catch. Whoop. No. Echo. No. Now these are little footies. Can you read them? Oh, Sarah, I've done that to you twice now. I would thought that was faulty originally because they're like a short one. Robert. Oh, Mr. Humphreys, look at that. You even play cricket in your family. You still caught a footy. Now, our next group that are coming up, 1, 2, 3. We have 3 representatives, and apparently I had a bit of a chat to them. They really enjoyed the drive down here, 3 hours in a car, as opposed to the mode of transport they were using over the weekend. They did about 600 Ks between them, riding bikes to raise money for cancer. So put your hands together for up there for Cazaly for that to start with. So that was pretty impressive. So they raised money for cancer, riding their bicycles. They've had a lovely ride down here. And this lady here, Tanya French, is going to have a bit of a chat with us about what is happening with their company at the moment, because there's a lot happening and they've got some really good new discoveries. And I think that the excitement of that might have been part of what was been fueling them to get here today. Would you please make them welcome, everyone?
Thanks, Chrissy. Yeah, I do have to thank my team for cycling 200 Ks each on the weekend. Very much appreciated. We raised a lot of money. Very proud of them. We're also very passionate about the work we do and our projects. So I'm just going to explain a few of those to you now. So Cazaly Resources, we're a diversified exploration company. We've got a number of exploration projects across a range of commodities. We actually have a few too many to go through today because it's a very short time frame. So it's our usual disclaimer. So I'll take you through the 3 where we've been most recently active. This is just a snapshot of our shareholders and capital structure. You can see managers and directors hold about 10% of the company. Our share price at the end of last month was 3.5 cents. We've got a market cap about 13 million. And at the end of the financial year, we had 10.8 million in cash and investments. So we're well funded to progress with the work that we need to do, and pretty cheap. Backing us is a great board and management team. So we've all got a significant amount of experience. I'm happy to say the board's dominated by geologists. A lot of boots on ground experience. We've got discoveries under our belt, and many of us have taken a number of projects through to mining. So today I'm going to focus on these 3 projects. The first project I'll talk about is our Halls Creek project. So this is located in the Kimberley. I'll discuss the recent work we've been doing on the Bomi prospect, which is a large porphyry copper target. I'll also touch on the work we did recently at the Mount Angelo North, which is an existing copper, zinc, silver resource. The second project I'll talk about is our Ashburton gold copper project. So this is in the Ashburton Basin. It's a very large scale play. It's a greenfields project, a large land holding, relatively underexplored, which is surprising, but there's still quite a bit of ground out there that is underexplored. It's early stage exploration, but we've had some really interesting results to date. So I'll explain those to you in a minute. The other thing we did was took an option to earn in to this project in North Queensland, the Van Rock project. So that's a new mineral province with tier 1 potential. That was an exciting play. We were testing a polymetallic target there. We did a single diamond hole. You can see there we've intersected some sulfides, but we're still waiting on the assays on that. So these are our other projects. We have a critical minerals project in Namibia. Again, a large scale project at the greenfield stage, about 70 kilometres in strike. This is underexplored, but it's prospective for copper, cobalt, manganese, zinc, and also lithium. So we've planned some more on-ground exploration there. That's due to be carried out probably in the next 6 to 12 months. The other project we have, 100% Cazaly, is our Yabby gold project. So this is in the Laverton Greenstone Belt. Most of us are familiar with that area, multi-million ounce district. It's again, early stage exploration project. However, the work we've done to date has identified several kilometre long gold anomalies. So that project's ready to move to the next stage. We also have a number of joint ventures, one at Mackenzie Springs and one at Mount Venn, where we retain an interest, and that's nickel graphite project and a gold copper nickel PGE project. Because they also hold some royalties and equity interest in iron ore projects, and I'll talk about that a little bit later on after I cover the projects. That one. Okay, so the first project I'll talk about is our copper Halls Creek project. A little bit of background, we're 25 kilometres to the southwest of the township of Halls Creek. The project area covers the Halls Creek Mobile Zone and the Coongie Park Volcanics, which are prospective for gold, copper and nickel. We're in good company there. We've got Panoramic's Savannah Nickel Copper Cobalt Mine just off the map actually. Oh, sorry guys. Just off the map to the northeast. And in our project area alone, we've already got one existing VMS deposit at Mount Angelo North, and we're currently working on our Bomi porphyry copper target. So Cazaly only recently acquired this project we had full ownership back in December 2020. Since then, we've done some on-ground geophysics. We also jumped in and did some RC and diamond drilling at the Mount Angelo North deposit. And this was to upgrade the mineral resource to be compliant with the JORC Code 2012. In December 2021, we delivered on that resource, and that's reported here at 1.7 million tonnes, 1.4% copper, 1.4% zinc, and 12.3 grams per tonne silver. So you can see that deposit has some pretty interesting and significant intercepts, 64 metres at 2.7% copper and 37 metres at 6.1% zinc. The interesting thing about that deposit is it is small, however, there is a line of EM to the south on that target. It's picked up a conductor, so there is potential for growth there as well. Once we completed the exploration there, we moved on to the Bomi porphyry copper target. This is an exciting play. It's about 2.5 kilometres southwest of the Mount Angelo deposit. You can see there that's the surface geochemical contours. So it has anomalous copper, zinc, manganese, and and bismuth at surface. And it extends for about 1,200 metres along strike, and it's 800 metres wide. So, I mean, it's indicative of a large mineralised system that's also backed by some great, very broad copper intercepts, 92 metres at 0.4% copper and 178 metres at 0.3% copper. So we've recently completed a drilling program which consisted of about 16 holes for 3,400 metres. This gives us a drill spacing of about 100 metres across and 100 metres along strike. This will provide us with enough information to estimate a maiden mineral resource, and we're hoping for that to be announced by the end of this year. And work has commenced on that as we speak. So you can see we got some really good results from this drill program as well. 110 metres at 0.4% copper from surface. It's quite an exciting area. You can see alteration at surface as well. And there's also some other good intercepts there, 114 metres at 0.3 and 102 metres at 0.3 again from surface. So very large footprint. It's open, as you can see, the most western line of drilling. It's open to the west, it's open to the north, it's open to the south. So we're confident that there's room for growth here. We'll just have a look at that in cross section. So here you can see the broad intercepts. You can also see, if I can get that in the right spot, we have actually got mineralisation that goes to the end of hole as well. So we know that there's growth potential at depth. Also, and you can see to the north, the grades are potentially increasing. There could be a northerly plunge direction to this. It is early days, however, and these are 100 metre space drill holes. So we need a bit more information first, but needless to say, we've got growth potential to the north, to the south and to the west. So it's an exciting prospect for us, and we'll continue working on this one. The next project I'd like to talk about is our Ashburton Gold and Base Metals project. So this is located in the Pilbara region in the Ashburton Basin. So Cazaly pegged this ground and the tenements were granted in late 2021. It's almost 2,500 square kilometres of basically untouched territory, really. So what we did is attacked it from a desktop point of view. We did a full regional scale structural interpretation with the assistance of PGN, who are specialist structural consultants. They identified 3 mantle tapping structures across our project. Sorry, I didn't have them on the slide, but the most well-known mantle tapping structure in the district is the Angelo fault, and that actually runs along the edge of the Pilbara Craton here, and that's associated with these million-ounce deposits at Poulson's and also at Mount Olympus. So we're really encouraged by that. So we then endeavoured to undertake on-ground exploration to advance the project. So to date, we've collected over 1,700 soils, streams and rock chip samples. This is the first geochemical database, regional database in this district. So it's quite a powerful data set that's identified gold and base metal trends over 70 kilometres strike. And the very exciting thing about that is that these trends match up with the mantle tapping structures. So we know we've got fluid pathways in the district. Now we need to focus in and look for where these mineralisations that have come to surface and we have economic deposits. We're still a long way from that, but that's our pathway. We've also done some EM surveys on selected target areas. So block 1 to the north on the Nanjalgardi fault, and then also a block in the central zone and a block in the southern zone. We don't have the final results for this EM survey. However, preliminary results have already identified a number of discrete targets. So we're quite encouraged about these, and we'll have these modelled as soon as the results are in. This on-ground work has also identified several copper gold prospect scale targets. So this is all about scale, this project. So it is quite exciting, even though it's early stage. And you can see that from those 70 kilometre long mineralised trends, we've got a number of smaller target areas that vary in distance from 3 kilometres to 10 kilometres strike at Carn Hill, New Finish. So there's a lot of room for deposits in this district. We still need to do a lot more work to find them. However, we're on the right track. The third project I'd like to talk about is our critical minerals project in North Queensland. So this is a recent option that Cazaly took to earn into this project. It's very exciting. We took the option to drill a single drill hole and then make a decision as to whether or not we'd progress with a joint venture. So this is where we are in the Gulf country, basically, North Queensland. We're in the Townsville Mornington Island igneous belt. So this district is undercover. There is about 100 metres of cover here. So it's unloved, it's very poorly explored. So this was targeted by the team who recognised the potential for Tier 1 deposits in this district. So the deposit we're looking at, the prospect, sorry, we're looking at here is the Van Rock target. You can see it's a magnetic high which sits on the edge of this extinct volcano, so this caldera. So this is a model that's taken from the Andean type silver, tin, zinc mineralisation. It's akin to that sort of style. That's what was targeted in the district. There's signatures of that sort of anomalous mineralisation with A1 and A2 prospects just to the south. You can see on the corner of the image there. So we drilled a single hole into this magnetic target to 521 metres. We did intercept, as I showed before, some sulfides. We also intercepted disseminated sulfides. However, assays are still pending. So we will be making a decision on this project once we get the results in. Nonetheless, it's an exciting play and there's potential to be the first mover here in a new space. The other thing Cazaly has done of recent times is divest some iron ore assets. So this generates equity. Also, we have equity and we also have a royalty that will be incoming in the next 18 to 24 months. So we sold Parker Range to MinRes in 2019 for $20 million. We returned almost half of that to shareholders, and it also set us up well to fund our exploration. So that royalty is 50 cents a tonne after the first 1 million tonnes produced. Our other iron ore asset in the Hamersley was recently spun out into Equinox. And there we retain a 15.7% equity and also a royalty. And Equinox are there to drive the project through to development. So why are we a good investment opportunity? We've got a really strong track record for project generation. We value add and de-risk each project through good on-ground exploration and effective exploration, and we can drive projects through to resource development. We maintain a pipeline of projects and we divest these to generate income. We have a great solid cash and investment position here and a very experienced board and management to drive all of our projects forward. And I think that's evidenced by the last 2 years of work that we've done. Thanks, Chrissy. Thanks everyone for your time.
Thank you, Tara. I thought I should actually stand down for a moment because that intro to you was, I think, probably the worst intro that I've given to anyone at the entire Southwest Connect. So my apologies. I had this little thing worked out that I wanted to do with you all. And do you remember those hearing aids that those of you who are in the room, I told you about the $9,500 ones? As I was starting to speak, a call came in from the Uber driver that was picking up my daughter in Perth, and the Uber driver proceeded to tell me that I needed to come out the front and kind of ruined my flow of thought. So my apologies there. It was not as coherent as it should have been, but thank you so much for that. And it's good to see a really happy geologist as well. You're really excited about your project, which was really good. Right, let us move on to Indiana Resources, and represented today by Executive Chair Bronwyn joining us up on the stage. Now she's going to tell us about the company's focus on rare earth elements and also gold exploration within a little place called the Central Gawler Craton Province, which of course is in South Australia. Would you please make her welcome, everyone?
Thanks, Chrissy, and it's a pleasure to be here today. It's been a while since I've had the opportunity to speak at a vertical events event, so very happy to be here. We are in the marquee. We've got a booth out the back there by the pool. I call it the cabana. We're very happy to welcome you there this afternoon or sometime tomorrow to chat a little bit more about the story that I'm about to tell you. So we're focused on the Central Gawler Craton. We'll start with the disclaimer, of course, but you already know what that looks like. So let's just start with a snapshot of the company and the corporate structure. You can see that there. I'm not going to read it out for you. What I am going to talk to you about is the structure of the board and the management team. We just announced yesterday the appointment of Richard Maish as the CEO for Indiana Resources moving forward. Richard Maish is both the CFO and an executive director of Australian Mineral and Water Well Drilling, and he's also a founding shareholder and CFO of Bacchus Resources. We purchased the South Australian assets of a company called Patron Resources in October 2020, and Bacchus Resources was one of the major shareholders along with AMWD in Patron Resources. So they are on our register and have been a very supportive shareholder. Through that process, we've developed a very strong both Bacchus and AMWD. We are going to start a program at the end of next week, which I'll tell you a little bit more about at the moment. As part of that dual program, AMWD has now mobilised an air core rig for us into South Australia, and that will remain in South Australia for the next 5 to 6 months to really ramp up our exploration activity on our very exciting rare earth discovery that we have. David Ward is also a recent addition to our board. He is the Chief Geologist for Bacchus Resources, and he was appointed also yesterday as an as a non-executive director. You can see from the shareholder distribution there that we've got a pretty good holding in the top 20 and quite a strong holding from the board, and most of that shareholding is actually mine. Just moving ahead then to the investment highlights and just a bit of an overview with you today. We've got a package in South as a very highly prospective and underexplored. Very excited by the level of underexploration. When we purchased the package in 2020, we saw that as a brilliant opportunity. We hit the ground running in 2021, and we've done a significant amount of drilling since that time, and quite a strong rare earth exploration portfolio that we'd like to continue to explore. Plus, we've also had some quite solid gold results, which I'll run through with you today. Part of the package also has some base metal potential, and we'll address that at the end of the presentation. So exactly where are we in the Gawler Craton? So we're highlighted in blue there. We're sandwiched between Tarcoola and Tunkillia, so historic gold producing regions. We've got a 5,713 square kilometre ground position. I like big ground packages. Those of you who know me and have known the work that I've done in the industry before would know that I usually play in big ground positions, and I quite like selling them to other people. So we did Mod Resources in the Central Kalahari copper belt, and also Winwood Resources that we sold to IGO. So what did we acquire in 2020? We acquired around 2,700 square kilometres of ground in the Gawler. And while I was in the process of negotiating that acquisition with the representatives of Patron Resources, we went off and we pegged nearly another 3,000 square kilometres of ground. Very cheap acquisition for us overall. It was done in the middle of COVID when everybody thought the world would end, and you could pick up project or tenement licenses in South Australia at will. We started off by targeting are very solid looking numbers, and they're some of the highest numbers that are coming out of the Central Gawler Craton at the moment. So we're very excited by that. You can see that where we are, we've got Ariadne to the south, moving up to Minos, and then further to the north west we have Partridge. And so that is where we had been historically exploring for gold. And we'll talk about those gold numbers now. So when we acquired the project from Patron Resources, you can see the amount of, there had been some initial drilling done and there were some initial targets highlighted, but it had been very sparse drilling, not in a coordinated program, not contained within one company, and done over a number of years and not really followed up. It seems to extend along what we call the Lake Labyrinth shear zone, and we have roughly 50 kilometres of strike within our tenement package. First acquired the project, the only project area on the tenement package that we had approval to drill for was Minos, and so that's where we had to start. You can see on this diagram here, the yellow results are the results that we have obtained in our drill programs that we've had since we acquired the project. We have done over 14,000 metres of RC and diamond drilling to date, along with 4,500 metres of air core. We're really excited by the gold potential of the Lake Labyrinth shear zone. We do think that the majority of this region remains untested, and we're keen to do more work. Those of you who follow the Gawler Craton may also be following Barton Gold, who's our neighbour, and they've also had a significant amount of activity in the Gawler and have also had quite promising results. So when you're starting to look at there's a high level of activity between ourselves, Indiana, Petrotherm, who's exploring for rare earths, and then also Barton Gold, who are continuing their programs. So just a quick look at the Minos drilling program that we had done. So you can see there that, I think you can see, you might be able to pick up on that diagram, that we are awaiting some additional gold assay results from an RC program that we completed in August. They are due imminently. There is nothing to suggest to us that the results that will be coming in will be markedly different from what we've already seen. We are looking at Minos as an area of a resource in the not too distant future. We then move on to the Ariadne prospect, which is to the south of Minos. What we'd really like to do here is join the drilling up between Minos and Ariadne over time. We think that there is the potential for the resource to actually continue along strike. And once again, we've got some really promising gold numbers in there from early programs. I'm now going to quickly flick on to the third part of the presentation and the ground package that we have, which is the Harris Greenstone domain. So you can see within the Greenstone domain that we have three separate belts in there: the Mulliner Well, the Hopeful Hill, and the Lake Harris Greenstone belt. Once again, it's been very sparse drilling that has been done. You can see there's basically just three little sort of areas where historic programs have returned some quite significant results. We're very keen to get onto this area of recently that we've completed title agreement for this area, and we will be moving to do heritage surveys in the lead up to Christmas, so we can get into this part of our tenement package and start some early stage prospecting work. What we have done, however, though, is talk to my old friend John Hronsky from Western Mining, and we did have him earlier in the year come in and do a review of the Hopeful Hill Greenstone belt. We've got a belief that this is quite a significant potential for a VMS zinc copper mineralisation in this region. We took the technical review that John Hronsky completed for us. We did apply to the South Australian Government for a co-funded exploration grant, which we received in the middle of the year. And we have planned an EM survey that will take place towards the middle of November. So we will have those results before the end of the year. We're really looking forward to being able to progress this as a standalone exploration project in the background, as we're also concentrating on our rare earths and our gold. So just running through what our near-term work program looks like. We're currently ready to drill around the 5,000 metre rare earth air core program at Minos. And with AMWD leaving the rig in the field for us, we're really keen to ramp up activity in the last quarter of this year and do as much exploration as we possibly can, particularly around the rare earths. Assay results from the August RC drill program are due imminently. We'll be progressing the early stage exploration for our base metals project in the southern part of the package. And from the October program for rare earth drilling at Minos, we expect to have those results into the market by mid-December. Which leaves me 1 or 2 minutes to give you a quick update on how my arbitration is progressing with the government of Tanzania. So many of you will have followed the story for some time and will recall that Tanzania expropriated Indiana's very high-grade nickel sulfide asset over an extended process in 2017 and 2018, subsequently advertised the asset for sale on its website in 2019. And so I subsequently started action through the World Bank to sue them for compensation. That has been now ongoing for some time. The final hearing is January of next year. So I'm almost at the end. We have been funded by a litigation funding facility for this. So there has been no cost to Indiana shareholders to pursue compensation through the World Bank. We're pretty confident that once we have the hearing in January, the final decision of the arbitration of the World Bank will be handed down probably in August or September of next year. And once I have an award from the World Bank, then I am able to seize Tanzania's assets in any country of the world that's a signatory to the World Bank. So what are we looking for? I'm looking for $100 million US approximately. Indiana's the majority shareholder of the historic Tanzanian subsidiary asset. So Indiana shareholders will be entitled to approximately 60% of any money that I recover through the World Bank process. So a quick investment summary overview for you. We've got a fantastic ground position in South Australia. You know, we dominate that belt in the Gawler Craton. We've got tremendous rare earth exploration upside. We've got strong commitments from our major shareholders to actively pursue a high level of exploration activity in the field using their drill rigs. The gold results will be out shortly, and we're very keen to continue gold exploration over the coming months. And we've still got the base metals to come on top of that. So I'll leave you with that. Thanks, Chrissy.
Thank you very much, Bronwyn. Right. But you know, there was a period this year when the shares of our next company skyrocketed 46% in 30 days. So what was driving it? What was driving the ups, the downs, the highs, the lows? Why would we get on board? Presenter number 23 on day one is Bannerman Energy, and the opportunity for us here is uranium, Namibian uranium. Talk us through the investment potential. This is CEO Brandon Munro. Please make him welcome. Now, he is a lawyer. He is a clever man. He is a respected expert on uranium and the nuclear fuel cycle. He's currently serving on the World Nuclear Association's advisory panel. He lived and worked in Namibia from 2005 to 2019, and he is a strategic advisor to the mining charter to the Namibian Chamber of Mines. He knows his stuff. Would you please make him very welcome?
Thanks very much, Chrissy. So we're here to talk about Bannerman leading the energy charge.
when many people think of energy charge, you're probably thinking electric vehicles, you're probably thinking renewables. Well, you probably also know that recent events have led the entire planet to rethink energy. And it's rethinking energy in favour, in a significant way, of nuclear power. And that's where being positioned as we are in the uranium sector is a tremendous advantage to us, but it's also a fantastic opportunity for investors. So a couple of quick words about Bannerman. We changed our approach about a year ago to focus on the fact that we are an energy company, and that is our mission, and we live and breathe that concept of being social leaders in the supply of raw materials to emissions-free energy. Now, how do we achieve that at a nuts and bolts level? First of all, we're about a $300 million company at the moment. Of that, about 50 million is cash. So we have a very strong balance sheet, and that's enough to see us all the way through from our advanced asset position at the moment to final investment decision at our Namibian Etango uranium project. We're debt-free, very strong board. I'd like to tell you a bit more about that later. So the world is looking at nuclear energy in a different way. It's looking at it through a different lens. And that is, in fact, the new way that the world is thinking about nuclear. It's no longer about cooling towers. It's no longer about large gigawatt scale. They are there to provide a very large scale baseload demand for uranium, but the future is changing, including the way that people are thinking about the transition of energy to the future. Now, the thing is, and what the world has learned brutally in the last 6 months, is the future of energy must, and I mean must, have 4 minimum characteristics. The first one is energy must be secure, as Europe has found out the very hard way. It must be reliable, as large swathes of the world are finding out as they learn that the firming that they've been promised with renewable energy is harder, slower, and more expensive than they thought. It must overall be affordable. And finally, what we were talking about at number 1 only a year ago, it must be clean, or else. And the or else, we are, in my opinion, only at the very, very, very start of understanding what the or else can mean for governments that get this wrong. And Europe is just one example. There is an enormous amount of pain that will happen to economies, to lifestyles, to humans, for governments that fail in achieving all 4 of these characteristics. So let's look at it. Energy security. We knew all this from the 70s. Now, most of you in this audience would remember this, and we're learning it again. And the whole world is learning it. It's not just Europe. The rest of the world, particularly China, is going, well, we don't want that, do we? And nuclear power is one of the primary beneficiaries of the tragic events that we are seeing in Ukraine at the moment. In terms of reliable energy, number of factors are testing the resilience and reliability of grids in the face of greater penetration by renewable energy. And going forward, if you combine all the clean requirement with the reliability baseload requirement, you're only 2 options. Only 2 options are hydro, if you're lucky enough to have the presence of those systems in an environmentally acceptable way, or nuclear power. Then if you look at affordability, so we were taking electricity in the developed world, at least, for granted until this year. But it goes a lot further than that. It is a basic human right to be able to put a washing machine in your hut in Africa. And we sit there in our very comfortable existence in Australia, in the first world, or in Brussels, or in Tokyo, or wherever these decisions are being made, and we fail to understand that we will not get the developing world on board with our climate mitigation goals unless they can, at the very least, put a washing machine in their hut so they don't have to go to the swamp to wash their clothes. Forget about TVs and all of the rest of that. If we don't get this bit right, we are finished when it comes to mitigating climate change. And I wish all of the people sitting in their comfortable offices in Brussels making serious policy decisions about these energy matters would understand this. And finally, we know this. This is what we were talking about a long time ago. And then COP26 was a watershed moment, in particular for nuclear power and for the policymakers who make the big decisions about how to allocate their energy assets. So what does this all mean? Well, we don't really understand what's happening in nuclear power sitting in Australia because, we don't have it. There's a law against it. Most of our media is still anti-nuclear to one extent or another. But some of the most recognisable faces on our planet have come around in a very substantial way towards nuclear power. Bill Gates, who's regarded as one of the better thinkers alive today, is a very staunch proponent of nuclear power. Elon Musk, who defined an entire generation's thinking about green EVs, renewables, is a strong proponent of nuclear power. And the next phase will probably give you a big surprise if you haven't been following the news in the last week. Even Greta Thunberg has come across to understand that nuclear power is essential if we are going to tackle climate mitigation challenges. This is profound. This is affecting generations of public opinion around the world. And the net result of that is that we're going to need an awful lot more uranium. What we're looking at here is World Nuclear Association's upper scenario from their 2021 nuclear fuel report. We've got the uppercase demand there. This is existing supply, both secondary and primary. Here's a bunch of development projects, including Bannerman's Tango project. And then that represents uranium that needs to be found, made viable and developed in that time period. So the world needs an awful lot more uranium. And I'm very familiar with those numbers because I was the chair of the demand committee that put these forecasts together out to 2040. And that's why I believe, not WNA, but I believe we should be following the uppercase scenario because of some tremendous moves forward in uranium demand in recent months. So what does that mean for Bannerman and Tango? Well, we've been at it for 15 years in Namibia, and we're really coming into a prime position to launch our project into a buoyant uranium market. And if you were to take three things away from this presentation and our company and what I've got to say, Namibia is the perfect place to develop a uranium asset. Tango is exactly the right ore body to deliver into the tension that we're going to see in the coming years in uranium. And we very much have the team who can deliver this type of asset into that opportunity. So I'll only say a couple of things about Namibia. Most people recognise it when you think of uranium. It's been exporting uranium for 45 years. It's the third largest uranium exporter in the world. And that counts for an awful lot in a socially, environmentally and politically sensitive commodity like uranium. And we just happen to be blessed to be close to infrastructure, close to existing mining operations, close to a deep water port that is exported for 45 years and close to nearby towns. Now, in terms of the ore body, first of all, it's strategic. It is enormous. It's 208 million pounds, plus it's open at depth, plus we have a satellite deposit that's substantial, that's JORC 2004, so we don't add that to the number. We've recently scaled down our operation to get into production sooner at a more manageable capex, but still at 3.5 million pounds, that's enough to service between 6 and 7, maybe even 8 gigawatts of nuclear power. So we are to become a big player in this industry. And we believe that we will be able to expand beyond both the 3.5 million pounds and also the 15-year mine life that we've considered at this point. In terms of our team, first of all, we've got a committed, long-standing and extremely capable board. Most of those names have been with the company a long time, notably Ronnie Beaver, who's our chairman, Mike Leach, who's our chairman in Namibia and an NED on the main board. He was the managing director of the Rossing uranium mine, which is down the road in Namibia, the closest analogue to what we will develop. And also, you might have seen last week that we're actually very proud and rather chuffed to have appointed Alison Terry to our board. If you want a single line external validation of our ESG credentials, well, the executive who led sustainability for a $50 billion company has chosen us as her first board since leaving Fortescue. So I think you've got everything you need to know about our sustainability and ESG credentials right there. Now, in terms of management, we've got deep uranium experience. Chrissy said some very kind things about my background, and also deep Namibian experience. So as well as living there, I've worked with the industry for a long period of time, as you heard. Mike Leach was MD of Rossing Uranium Mine. Werner Ewald, who's our MD in country now, was mining manager there. And we've even got the likes of Norman Green, who built the Husab uranium mine, providing oversight via our technical steering committee on our project. So we've got the people with the skills where it counts: uranium, Namibia, financing, sustainability. Now, a couple of words about our project. These are PFS outcomes. Now, the thing is, we are highly pregnant with the DFS right now. We're kind of 8.5 months pregnant here, making sure that we've got the ambulance on speed dial right now. But I'll tell you about our PFS outcomes so that you're locked and loaded, ready to benchmark those against the DFS when it comes out shortly. So it's 8 million tonne per annum throughput. And at that 3.5 million pounds per annum that I told you about, over a 15-year mine life, we'll mine and process and deliver 53 million pounds of uranium to start with, within that 208 million pound ore body. Now, we get a very good processing yield for heap leaching with a low strip ratio, and that results in a $39 a pound OPEX. At a PFS capital of $274 million and a uranium price assumption of $65, we're delivering a post-tax NPV of $222 million, payback over 3.5 years, and a healthy 20% IRR. We used $65. I would encourage you to take note of my opening slides and consider formulating your investment on a larger uranium price than that. And that's when you will start to see our leverage really respond very well as you look at the financial sensitivity of higher uranium prices to our project. Notably, it's very low technical risk, and we've de-risked it even further by building a demonstration plant that we've run for several years that you can see there. We have a mining license application in process right now. It's a conversion from a retention license, which is a shorter step than from exploration. And we've got the environmental clearances that we need for the project. A whole array of first-rate social programs that position us as a leader within Namibia complements the environmental credentials that we also have. So if I look then at what we're doing going forward and what the investment outlook is for people who choose to join the register. So first of all, we've got the mining license application. That's now a tick because we've got that in and the Namibian Ministry of Mines are looking at that. The next one is the Etango DFS that I told you about. We are ready to deliver that this quarter. So by Christmas, you'll be able to enjoy that. Front-end engineering and design, as I said at the beginning, we've got a healthy balance sheet with $50 million. And that is enough to equity fund front-end engineering and design. So we don't need to wait until we're financed to start that work and to start detailed engineering. We will progress that with our cash balance. And that means that we can continue in parallel a process that's already commenced with financing and positioning ourselves to write contracts when we think the market is in the right shape to deliver superior shareholder value. And all of that should concertina together for a final investment decision by late 2023. So Chrissy, thanks very much for the introduction, and thanks everyone for coming along and towards the death knell. I'll see you for a beer shortly. Thank you.
I was just earlier on today when we had a discussion on uranium as well, I mentioned a podcast that I'd been listening to with Dr. Carl, when he was talking about, Dr. Carl's gone into uranium recently, obviously in a big way, but it was his latest podcast that he did on the 12th of October. So if you looked up Dr. Carl, the 12th of October, you'll be able to see where he's talking about how we as nations need to take on board the responsible storage of spent uranium, and that we then can actually have this fantastic energy that we're all talking about, the potential. Right, team, we have one presentation left. You've all done particularly well, and for that I shall reward you all with drinks out in our private marquee out the back near the pool. Well, some people are getting in early. Are you going early, are you? I won't let them serve beer until I'm out there. Oh, where are you going? they're going together. Isn't that sweet? All right, okay. Right, our final presenter today is Banda Mining, and stepping up today to talk to us is their newly minted CEO, relatively newly minted. He's got a bit of an impressive pedigree. He comes from that rare unicorn that we all wish we'd invested in. And if you did, I don't want to hear from you. That would be Northern Star. So he's come from there. He's with Banda Mining now. He's been there since the middle of the year, but he's only recently been appointed CEO. So Luke Creagh is going to talk about Banda's 3-year strategy to deliver shareholder value for us if we choose to invest. Would you please welcome Luke?
Awesome. Thanks, Chrissy. Thanks to Vertical Events and Canaccord as a major sponsor for the invite and the other sponsors as well. Let me just work out how this works. Look, I know it's late, so I'll be pretty punchy as I go through this. And if you've got questions for me, please come and see me after this. But the main theme of today is really to sort of talk about a little bit where we come from, where we're at now, and really the value add going forward, and that we're starting to make the right moves in the right direction. This is where we're at today. So we are improving. So 3 months ago, about a 3-cent share price. We're up to 8 cents now, 110 market cap. We've got a relatively new board. Peter Mansell's been there for a few years. Myself and Alan Rules have just stepped up to the board, and we've got a good management team. And our current register is 50% institutions, and we've got really good support from our major shareholder in Hawke's Point. And what I want to talk about here is probably just talk a bit about the past, and those of you who are aware of the story will know it well. Those of you who haven't, it's sort of something you probably hear around the traps a bit. But the last 20 years of this tenement package, it's been definitely not a success story. And the last few years under Eastern Goldfields and then Banda, it's been a pretty difficult story to watch, actually. So when they first approached me for the job, and I started looking at this, and I was at Northern Star, thanks Chrissy, which was a pretty awesome vehicle. I was like, absolutely not. I am not joining this company. And I spoke to the major shareholder, and they said, look, can you come up and have a look and just see what your thoughts? And it's only when I got up there, and if you read sort of the previous 12 months or the last financial year prior to this one, you sort of see why it's sort of looked pretty bad from the outside. But it's only when you get up there where you suddenly go, wow, like this is actually a pretty impressive tenement package. And so like when you put it on the screen, it doesn't quite cut it, but really, let me go back one. This here is about 120 kilometres of tenement package. And you've got 2 major structures ripping up through that are highly prospective for gold mineralisation. And you've got basically 100 kilometres of dotted old timer workings all along this. So when you look at that, it was hard not to be excited when I was up there for a couple of days. So then really the step back moment is sort of what's gone wrong. You know, what can you do differently to leverage value out of this rather than what's been happening in the history. And that's really when you start unpacking just when strategy goes wrong, I think. So it was really easy to get distracted by the gold anomalies and the amount of hits and the amount of old workings and the prospectivity of that belt. So it was really a large exploration play with a lot of potential. The other thing, it has a small mill on it that was almost ready to go. So 1.2 million tonne per annum mill, typically suited to sort of high grade. And the previous companies back in the 2000s that were making money were feeding a lot higher grade dirt. So what that means is high grade underground dirt, but then an open pit mining strategy. So when I was sort of looking at the macro, it's like those ingredients, like any one of them on their own work really well. When you put them together, it gets pretty difficult pretty quick. So when we looked at it and we said, right, okay, so park the DFS, which was low grade open pit mining with a small mill on an exploration play. Let's actually all get together and go, what can we do differently? Because previous few years has been pretty tough. And that's really when we started to go, okay, we can really focus on bringing high grade in. And then when you put it through that lens, you suddenly go, this place has a lot of potential. But what we really had to get out of is sort of a 5-year DFS that was trying to be held and into strategy. Like, what is the strategy we are to liberate value? And this was grabbing 20 leaders in the company. It is nice going from a massive company to a small company, just so you can get the key decision makers all together. That's a massive benefit. And we sort of about what are the key structural changes, like from a first principles perspective, that we're going to implement to go, hey, this is going to change the future. It's going to change for the better, and it's going to create tangible value for our shareholders. And this is what we came up in the short term. So it's really focused on the fundamentals. So don't sort of get, I guess, doe-eyed looking at the amount of anomalies. Let's start really honing in on, you know, the key structural controls, really dial in our geology, our boots on ground, basic principles, get them laser focused and right. And then really start looking at what we can do on the operations front. Because it was spread really thin, and then we pulled it back and started saying, let's focus and really optimize what we got. The other thing we did from a macro perspective, you can't see it well there, but the reserve calculations were done at 2,200. So essentially anything that made $1 at 2,200 would get into the mine plan, had a 450,000 ounce reserve, didn't make any money. So by dropping that back to 1,850, which we've done, we kicked out a couple of 100,000 ounces, but it allowed us to focus on the high grade stuff. So basically value for money, and it brings that focus in. And then the other big thing is this commitment to the exploration. So because the operations were getting tied up and pulled back, like from their expected performance, all the money was getting tipped into that. And it takes a lot of discipline. If we acknowledge that the key value driver was exploration, that's where the first and the last dollar should go. So it's just bringing the discipline back to say, hey, let's get the right energy in the right areas and go, you know, this will be the way to create value. So then the medium term, once we get started on that tenement package, the organic growth story is absolutely outstanding because the tenement package is so good. So the medium term and longer term I won't talk about, but as we get the first column right, we can really step into that. And this allows a really simple decision making. So you're not sort of tied to a big DFS document that isn't working. You're actually tied to a strategy that you can pivot really quickly if things aren't working, and you pivot to the things that are working. So we rolled this out 2 weeks in. So I started 4th of July. So sort of mid-July, we did that. And then we started going, right, let's start at the very start of it. So the geology piece was big for all of us to just put the discipline back in there. We got a really good structural guy to come in. He's been helping us outstanding and working with the teams on site. So we're combining sort of, I guess, the existing site knowledge with some, you know, really high powered capability, which we didn't have before. And we're starting to get some really good ideas generated. And then we start sort of ranking targets. We know that we want high grade. We don't want to just keep working around in sort of, you know, 2 gram pits. So then we can start actually going, okay, this is sort of what we're looking at. This is what we do to create value. And sort of this is how we can rank targets going forward. And then today we sort of released the first, I guess, results of this approach going forward. And the first one was Riverina. So Riverina is about 50 kilometres north of Davyhurst, which is where the processing plant is. But really this presented quite well. It was a sort of a low grade pit that got stopped just as it hit the fresh rock. But when we looked at it, we said, actually, this is pretty good. You've got a kilometre of strike. So the scale, that's a kilometre there. So a kilometre of strike, it's open at both ends in terms of structural perspective. The structural mapping sort of started opening up a few areas that we hadn't looked at that were highly prospective. Historically high grade, so 12 gram per tonne. Only mined very shallow, 120 metres. Already had a resource on it, 151,000 ounces at 6.6 grams. So when you really sort of peel this back, you go, this is a pretty good target to start with if we want to put a few drill holes on it. And then the other one is CapEx to start. Like basically, we just got to mine down about 15 metres in the pit and you can cut a portal and you're virtually in ore from the surface. So this one got a lot of our attention really quick. And it's amazing when, like, you know, you spread a lot of talent over a lot of deposits, you don't sort of get them worked up really hard. Riverina sort of, once we got everyone focused in on this one, it started to get worked up really well. And then it started to get pretty exciting. So we've started this phase drilling. And so, sorry, just before I get off this page. So from a plan view perspective, this is plan view. These are the 2 structures we were actually targeting, which was main lode west and main lode east. And you talk about main lode east is the main one that the existing resource is on. And that's what we're looking at would carry a decline. This structure here called the Murchison lode we considered was really low grade. So it sort of dragged down the pit from a bulk low grade perspective. Average is sort of 1.5 grams. But really this was the prize we thought of in the main lode east. So when we started drilling, this is what we started with, and the yellow holes are new ones, but this is the old workings down to about 120 metres. But when we looked at in the detail of what we got, we had some outstanding hits already there. So this is like 3 at 33, 5 at 16, 2.8 at 21. These are all really highly prospective hits through here. And what you see, like this is the kilometre strike that I was talking about. When we've got a structural ore body that is showing these tenors and widths over this, we know that over that you're sort of going to get further and further gold concentrations. It's a drill density issue. And this is really wide space drilling. The other thing that popped out quickly as a really big horizon for us is this evidence of thrust faulting, which wasn't picked up before. So this one here is a major thrust fault, and this one is another one coming through. But we see this as basically transported from way down to the south to the left, north to the right. So this has been thrusted up from down here. So we see this as a key, I guess, mineralization horizon where it's slightly different on this side to that side. And that gets more important when we talk about the merchant as well. But what we're looking at is we got really nice high grade. We got open each end, we got open at depth. So we thought, okay, this is almost there as a deposit in its own right. So let's put a few holes in it. We started off in the north, and the first couple of holes we put were okay, but a bit disappointing. So we're picking up structure, not sort of super high grades. Further up in the north, we picked up some better stuff like 2 or 3 at 20, 2 at 12 up around here. And then we pivoted down the south. And this is where we sort of started really noticing this high grade plunge coming through. But these 2 holes are the 2 deepest in the package, and we just got assays back for them sort of end of last week and on Monday. And this is the 2.8 at 6, and this is 1.2 at 29 grams. So this is essentially extended our mineralisation of the main lode down a vertical 100 metres. It's kept this strike open. It's proven up the southern plunge, and it's considered open all down here and at each end. And this is only 350, 340 metres below surface. So we've still got another 18 holes to go and infill along here. But this suddenly just got a whole lot bigger and probably better grade than what we were thinking, which was pretty good. So the other thing that we noticed in the last few weeks, this is all pretty hot off the press. If you step in section view 80 metres to the east, if you go back to the original line, there's the Murchison deposit that I spoke about, which is what the high grade or the low grade bulk up here in the pits that we grabbed. We come back to this thrust faulting line, and we started to see just in sort of grade control drilling in the pits and just by the nature of where we're drilling from into the main lode, we're starting to see this high grade concentration below this fault. And we're actually getting a bit surprised by that. So we pulled up the old drill holes to look at, because there should have been a whole heap of holes down here. And there's a couple of things we discovered. One, there wasn't many holes through it at all. And that was because a lot of these holes were drilled from the west up through here. So all the deeper holes through here were drilled from the west. And then we started to get some pierce points through here, which had tenor, but no real width. And then we started to see evidence of another thrust fault coming through here. But the other thing we did in the old drill holes, and these 3 are the old drill holes, it's 1 at 35, 5 at 4, and 1.3 at 11. We sort of had 3 really good hits, and this is sort of 100 metre spacing that we're going through here. And then we had a couple of pierce points from those 2 deeper holes I spoke about before. And this is what got this one really interesting. Our deepest hole here is 0.3 grams, 0.3 metres at 171 grams. So suddenly a lot of Viz gold in that. And then just beside it, we still got structure and slightly less tenor, 0.8 at 4.4 grams. But this is just a completely open, completely undeveloped. And you're getting high grade tenor that we think is both structural and chemical because the sediments will react with the fluids coming through that could form the gold concentration. So really early days, but really exciting. And why these deposits, especially these ones when you're getting sort of nugget effects of that and that, they can be a little bit tricky to model, so you've got to respect them. But the other really good thing that plays into our favour is just the orientation, the geometry of these lodes really support getting in and mining this. And this is the other part that makes it pretty exciting. So you can imagine we can punch a decline down the centre, and this is main lode east, which basically carries the decline, once we sort of get the economics and everything sorted on it. This will carry through. So this easy to grade control, easy to pick the high grades, easy to get in there. This Murchison lode here is basically free carry, but the same thing occurs. It's easy to pick the high grades. You can get a really good, clear geological data, and you can really target and go, okay, we're comfortable with this amount of gold in here. You can duck in really cheaply off the same backbone of every bit of capital, and you can actually get in there and extract that. So this is an evolving story. This is 12 holes out of 30, and we're going to sort of start infilling this. So that's pretty exciting on that. How much time have I got left? None. Okay. I got too excited talking about geology. Okay.
But you can always go down and set yourself up with a beer, and they can ask you excited about this.
I
Is
got
that
to
what
the
you
end.
said?
That's
Are
exciting.
you excited about what he's saying?
Yeah,
Yes?
we got the mill, we got the people, we got the culture, and we're getting the improvements. So come and chat to me about it.
Good on you, Ron. Thank you so much. Bringing up the rear for us today, 24 presentations. We did do very, very well. Come down and have a drink. I'm not going to talk any longer, but